In other news tonight, the Bank of Ghana has dropped the rate at which it lends to commercial banks by a significant and record margin. It came down by 150 basis points to 14.5%. The move is to lessen the impact of the coronavirus on the economy. There's more in the following report.
The Monetary Policy Committee, in a statement issued a while ago, noted that a cut was because adjusting the rate would not pose any significant challenge to the outlook of inflation and possibly economic growth. The Bank of Ghana also projected that GDP growth could decline by some 5% in a baseline scenario, or in worst-case scenario, half, by about 2.5%. As part of efforts to improve liquidity in the banking space, the Bank of Ghana has rolled out a series of measures. These include reducing the primary reserve requirement for banks from 10% to 8%. This is expected to improve liquidity for banks so that they can lend to critical sectors of the economy, especially to small-sized enterprises. Also, the 3% capital conservation buffer, CCB, for banks has been slashed to 1.5%. This action is to enable banks to provide the needed financial support to the economy. This effectively reduces the capital adequacy requirement from 13% to 11.5%. The capital conservation buffer for banks of 3% is also being reduced to 1.5%. This is to enable banks to provide the needed financial support to the economy. This effectively reduces the capital adequacy requirement from 13% to 11.5%. Provisioning for loans in the other loans especially mentioned OLEM category is reduced from 10% to 5% for all banks and specialized deposit-taking institutions, SDIs. As a policy response to loans that may experience difficulty in repayment due to the slowdown in economic activity. Also, provisioning norms for loans in all other categories are maintained. This should provide capital relief to banks and SDIs in these uncertain times. Loan repayments that are due for microfinance institutions for up to 30 days shall be considered as current as in the case for all SDIs. The Bank of Ghana has also agreed with banks and mobile network operators on measures to facilitate more efficient payments and promote digital forms of payment for the next 3 months. This also includes waiving charges on some cash transactions by up to 100 Ghana cedis. All mobile phone subscribers are now permitted to use their already existing mobile phone registration details to be on board for minimum KYC accounts. It has also reviewed the daily limit on transactions depending on the amounts that you have. According to the Bank of Ghana, it is closely monitoring development as regards the impact of the coronavirus on the domestic economy and will not hesitate to convene an emergency meeting to deliberate on other measures if required.
And my colleague, George Rafe, joins me in the studio for more on this. And George, this is certainly some good news for the financial sector, especially after a long while we've had a rate at 16%. Now it's coming down to 14.5%. How significant is this, and how will it help mitigate the impact of the virus on the financial sector?
Well, you want to look at the policy rate is the rate at which the Bank of Ghana lends to commercial bank. It is also a benchmark for lending in this country. So it gives you an indication what will be the cost of credit. If the Bank of Ghana believes that going forward there wouldn't be any threat to the economy and they've lowered it, it means that that would impact on the cost of credit in the country. Now, again, if you go through the same statement, the Bank of Ghana has done some 2 scenarios for us that at worst the economy will grow at 2.5%. That is serious. In a long time, we've seen the economy grow by that margin. It means that you need to put things in place that would help stimulate growth. It is believed that when you pump in more cash into the economy to critical sectors, that could stimulate that growth. So if you go through the same statement again, the Bank of Ghana has put in certain requirements that would make more cash available to the commercial
And
banks.
what are some of these
These
measures?
are reserve requirements. These are basically, in layman's terms, you're supposed to keep some amount of money with the Bank of Ghana, a limit on your deposit. What the Bank of Ghana is saying that they're going to make more available to the commercial banks. It means that in return, you are supposed to also lend to businesses and small businesses. So they are, by the several monetary policies or monetary mechanisms, the central bank is trying to make available more cash to the commercial banks, i.e. compared to the reserves and the limits that we're supposed to keep with the Bank of Ghana. And they believe that that would help push some money into the economy at a time that some businesses are not doing well, because imagine a business that has been forced to shut down. You go into the nightclub space and you look
and
at
especially when we
Bloomberg.
are coming just from the financial sector crisis and all that.
Well, some businesses have picked up. So some of these measures would try and help putting some money into the system at a lower rate, even trying to review how businesses can pay back their loans. And all these things, the Bank of Ghana believes that it would help stimulate the economy based on their projection that we may at worst end the year with a 2.5% economic growth. That is scary.
That's quite interesting. Let's look at the other issue that has to do with the Momo charges, and then also that it's been reviewed up to 100 Ghana cedis. And so what does that really mean?
What it means is, when the Bank of Ghana is trying to tell us that if you do a transaction on any of the platforms and there's just 100 Ghana cedis, you might not pay. You are not going to pay any
So
charge.
if I'm sending somebody money, I will not pay any charge on the 100 Ghana cedis.
Money. All these things are meant to help pushing some money into the system, because it's believed that at a time when you're also trying to restrict people from moving, you want to push a lot of transactions onto these electronic platforms. So again, if you also go through what the Bank of Ghana has agreed, depending on the amount of money that you have in your wallet, there might not be any restrictions on it. Because don't forget that there's some restrictions on it actually, because if you cannot take more than 2,000 Ghana cedis based on the amount you have in your money. So per the various limits and the various KYC, they have actually waived those restrictions. That would help move money around, and it's believed that that would also help people to do various transactions, even though you can stay at home and not walk into the banking hall and do a lot of things. And all these things, Sandra, as I said, is that it's trying to more of stimulate economic growth by making available more money to businesses and even you and I, and don't put in any impediments in your way in trying to do transactions on these various electronic platforms.
And hopefully this is going to help the financial sector. I don't know whether there's other interventions that have been put.
Well, it's in these things you do scenarios and projections. And that is why the economists will always want to say that all other things being equal, if you're going to hold all these factors constant, and it believes that it's going to work. So if you look at ending the year at 2.5% economic growth, then you know that you really have to sit up. Now, this is just the monetary side. It means that the Ministry of Finance also needs to come out with some measures. Tax reliefs. Listen, some businesses are shut down for like 2 weeks. Are you going to go back to that business at the end of the month that pay taxes to me?
Right.
So if that stimulation will really occur, there should be some fiscal measures to support what the Bank of Ghana is doing for that growth to come about and that stimulation to come about.
Okay, George Biafe, thanks so much. We'll wait for that announcement from the Minister of Finance as to what can be done to further lessen the burden on businesses. The good news is that the lending rate has come down from 16% to 14.5%, and that's how we end the first part of business. My name is Sandra S, and I'm shortly back.